You're watching the Own Network. My name is Gareth Lewis, and I'm your host this evening, or this morning, this afternoon, wherever you're tuning in from in the world today. Thank you very much for taking the time to join us. I'm joined online today by four very special who know a thing or two about tokenization and RWAs, which is a good thing because the title of this evening's discussion is Yield Bearing Everything. So let's start right in the deep end. What's the craziest thing that you've heard someone is trying to make yield bearing, and where do you draw the line? Let's start with Joao.
Great question, man. Great question. I think there's nothing too crazy. There's somewhere on the risk curve for everyone. So whatever your dreams are, if they're yield bearing, I think you should tokenize them. I was recently on a podcast with someone that was basically tokenizing something similar to carbon debt, and I thought that was super interesting. So I'd probably go with carbon related yield as something I like in my example here.
Okay, cool. Okay, so how about you, Osman? What about you? What do you think?
Wow, it's crypto, right? So you have like every single yield bearing scam that can be there as well. But I recently was speaking to, well, as early as today, and somebody was like, oh yeah, we're tokenizing mining rights in disputed regions in Africa or something like that. And I was like, wow, that's like what's the legal claim there? So that's a bit crazy. But yeah, I think generally good sources of yield which have good structures and incredible tier one jurisdictions I'm supportive of.
And on that point, good sources of yield. Abby, can you tell us a bit about what you think? What's the craziest thing you've seen?
I recently, you won't believe, someone tokenized a part of the moon, which is sitting in a museum, and they're generating yields out of that. So I think that was quite cool. I don't know how that works, but or I don't know how they're selling that, but yeah, it is what it is. I think you can tokenize pretty much anything now.
Damn, that really took going to the moon quite literally.
Exactly.
And wait until you have the market euphoria, and then people start FOMO, and all these new crazy ideas of tokenized products come out. You're going to see crazy things in the next 12 months.
So, Jose, talk some sense into me, man. Like parts of the moon, really? Mining rights, okay, maybe I can get there with you on that. But parts of the moon, talk some sense into me, man.
Mining rights, I think they do make sense, right? Because it's an asset class that is exclusive to very few. And what you are doing is exposure to the underlying, and then the underlying trades at a discount to gold spot price. So Usman will have the depth in there. But I think that's a good alternative product when you look at gold as an ecosystem, and you have spot digital gold, you have boring lending gold, and then you have on-mine gold. I think that there's a fit there. But not everything can be a yield generating asset, despite the title. Looping is something that's interesting, which is a DeFi way to create yield of something that might not be yield producing. And these are all things that are being tested this time in the market for the first time. So there's going to be things that turn out very good and very useful in new products, and there's going to be things that might explode as well.
I started to get a bit worried then, Jose. I thought you were going to try and propose that we go to the moon to mine gold, and you were combining both of those things. Usman, can you help us? I'll use the word grounded with a lowercase g, but can you ground us in something a bit more tangible and real here, and talk to us about your story with the gold?
Yeah, I mean, I think for us, right, when we think about just generally tokenization, I think there is this huge wave of everything will be tokenized, but I think not everything should be tokenized. But with gold specifically, the traditional what the traditional notions associated with that is not a yield bearing asset, and so for us, for somebody who's got experience within the wider industry, know that there are forms where gold can generate yield, and really we want to sort of get the wider audience globally access to this sort of very institutional, very sort of credible real yield. The way it works is through this instrument called gold leasing, where essentially jewelers and refiners who have a big need of gold, as it's probably their largest input cost to do business, they effectively lease this gold out from bullion banks or financing institutions who have, let's say, at the back end, a bunch of institutions and who are high net worth to deposit gold with them. Traditionally, gold has been a negative carry asset, which means that if you own this asset, you're paying storage fees, you're paying insurance, and what that has meant is generally people are paying via their ounces, so they're just paying, every year, selling a bit of their gold to pay these costs. But with this solution now, actually, people can not just only do away with a bunch of that stuff, but they can also make their gold productive and earn yield, and that is exciting on the premise of its own. But then just to sort of connect to what Jose also said, imagine you could actually also look that yield. So not that now compared to the TradFi or traditional yields of this leasing market which are anyway excluded to most investors, we're bringing that on chain. But hey, what are the other kind of structured products that we can put on top of that? Now imagine you can also borrow against this instrument, right? And Huawei and we spoke about this a couple of weeks ago at Cannes, and obviously these are we're still at the stage of that. There's a lot of idealism and how we make it happen, and the market might not be ready to absorb some of the structures that we've discussed. But really, it's a start of sort of trying to explore what is really possible.
On that note, Osman, let me just ask you a follow-up question on that, because obviously gold has a universal appeal. We're at a point in time where gold is hitting an all-time high, so it's well understood. Yeah. But for those people who are listening who might not understand all of the concepts that you just mentioned, can you help just break it down how we can realize yield from holding gold?
All right, so fairly simple. Imagine you're a jeweler, right? And I'm somebody who owns gold, right? Currently, my gold is sitting in a vault. I'm paying storage fees and custody fees on it, so it's sitting on the vault. You're a jeweler refiner. You need to sell jewelry. Most jewelers and refiners actually don't make money on the price of gold, right? They're betting on they're providing a service, i.e. they're making the jewelry in their factory, and they put a making fee or a product fee on top to sell you that necklace, let's say. Now, to manufacture that necklace, I need gold. So either I can go to a bank, either you can go to a bank and be like, hey, bank, give me $100 worth of gold. And you're like, great, but then what if the gold price goes up tomorrow or gold price goes down? You're exposed, right? And so you might go to a hedging desk to hedge your exposure against the price of gold, because you want the effect of you don't want to take either way exposure. And so that's one way you could finance yourself. But generally, there's two things. One is most gold businesses globally, unless you're the top 5% of.
On the topic of.
Sorry, can you hear me?
Please, Osman, please continue.
Sorry. Yeah. So it's sorry, I lost my train of thought. Yes. But yes,
don't worry.
So imagine you're essentially so most jewelers or refiners can't access capital anywhere from banks. So that excludes the idea of actually what do I do with financing. But the best way actually is these traditional instruments called gold leasing. What does is that essentially instead of me lending dollars from the bank, which I'm exposed to price movements, I can actually lease gold. Now this is essentially, think of it as just a very simple concept. I'm renting gold. And so I will rent, you will rent gold from me. I'll give you my $100 worth of gold. You will use that to make a necklace, right? And if you, let's say you're not renting with me in dollar terms, you're renting, let's say I give you 10 grams of gold, then you would only have to give me 10 grams of gold when you sell the necklace. So you're not really exposed in gold price terms, and we're just dealing in gold terms, right? And that's great, because then suddenly I, who has to pay a lot of storage fees, insurance fees, is going to earn an income on my gold, like a rent, and you're effectively able to finance your operations in a better economical way.
Got you. Okay, so Abhinav, I would like to rent some gold from Osman. I don't have enough money. I don't have any money. How can Mansa help me out here with your liquidity line?
So essentially, right, For me, how Mansa generate yields is, or how Mansa generates its yields is through financing for payments. So now this is where uh, there's a customer that goes to Usman and goes like, "Hey, I want to make this payment, but it's going to take 24 hours, 48 hours, 72 hours, sometimes 5 days, right? You're using your banking traditional ways, you're doing Swift wires, cross border, whatever it is, right? How it works is when the money is being wired out, we require is the proof of payment. It could be a Swift wire, a Telex wire, or for example, in some cases, pre-funding as well. Once we get that proof of wire, what we do is we finance these payments where Usman goes like, "Hey, okay, the money is on the way. Could you please give me that liquidity, the stable coin liquidity for us in this scenario USDT, in at T+0, so that I can settle with my client. I can give him the gold, and while Usman will pay me back in a day, in 2 days, in 3 days when he gets his fiat, right? So that's how we come in and provide that liquidity. I,
And
as an individual, never in my or in like 30 years of my life, I thought that we could generate yields while financing payment. Right? We could make money out of literally fiat sitting in bank accounts, and we could generate yields out of that, right? So that it is quite interesting on how the payment financing works. But yeah, this is how we could probably help in buying that gold through Smart.
and Joao, so how does Mystic then help solve for this space? What's the lending platform that Mystic is offering?
Yeah, so kind of following up on this, I guess, journey where have a gold token that is yield bearing due to the leasing logic that Usman explained. You'd come on Mystic, use it as a collateral to borrow stable coins that someone else has deposited in the protocol, pardon me, use that to then any other purposes you want, other short-term liquidity needs that you need it for real life or something like that, or you want to have exposure in another asset. But more traditionally in DeFi markets, and much like Jose mentioned at the beginning, you can also use that to leverage, so loop. So you use your gold as collateral to borrow stablecoins or another liquid asset. You use that to buy more gold, and you repeat that process an n number of times to get n times yield on your gold position, and then you're exposed to gold, leverage exposed to gold, and obviously in the case that the asset is yield bearing, which is the conversation here, you multiply the yield that you gain by the number of times that you have looped the asset, right? So if you have 5 times the size of your initial position on an asset that's yielding 10%, you would have 5 times that minus the yield you're paying to borrow the money necessary to maintain a position that large. And so leverage is the quintessential DeFi use case for yield-bearing assets. It is the first thing you do when you have a yield-bearing asset in crypto, is the first thing you look for, because this is what's going to balloon your TVL. It's what's going to bring about the utility of the asset, really. And so when I think we look at yield-bearing assets, we were just basically making sure they can be used in DeFi, basically. And that's kind of how we fit into this picture, and where me and Usman or Abhinav end up having overlap.
So, thanks, Charles. So I think that's pretty clear. So, Jose, I've got Usman's part in the picture, Abby's, Joao's. What's your part in this picture? What's Own doing in all of this?
So Own is the network of Fasset, and what Fasset has done is that it's aggregated distribution. It's the user base, which you can call liquidity as well. It's the demand side. Own, what it does is that it aggregates everyone that wants to reach that user base, that liquidity. So in that case, bringing gold products to them, bringing the yields to them. The difference is that in the Fasset interface, the user is not seeing tokenized gold. It's not seeing looping. They're just seeing buy gold, earn 4% or even 8%, as I spoke with Usman of how you could, the yields that you could generate on the back with the DeFi operation. so the choice for the user, they have different digital gold options, but you have one that yields 0, and then you have one that has 4%. The choice becomes obvious, and the user experience becomes simple. So that's how we win in terms of the distribution, and that's how you, with that network approach, grow the value of everyone, because the users are not going to leave, and then your partners need the user base to monetize it, and it's a network effect that starts with Own.
So how much, maybe this is an open question to the floor, right? Everyone's working on their own individual projects with individual yield-bearing assets. But at the core of all this is the customer and the customer's problem, the customer's desire to buy into new, interesting assets that have a yield-bearing element to it. How are you finding the retail market? First of all, we'll come on to the institutional market. But how are you finding the retail market in terms of adoption, in terms of awareness, in terms of understanding of the benefits of these products? Anyone to take?
Well, I think from my perspective, you really have, if I can start here, you really have two profiles, right? You will have the more crypto native profile, who is very DeFi savvy, or may not be, but is savvy of crypto dynamics at the very least. And their difficulty is going to be really understanding the RWA or whatever the assets risks are. And so their problem, I guess, is because they're theoretically less sophisticated than an institutional user, getting on board with more complex dynamics might be an issue. I think there's a lot of interest in the narrative, right? Just because the narrative promises potential returns on a token denominated investment, right? And then there's the Web 2 native user that's just a user that's familiar with a completely different asset class, say a stock, gold potentially, and they are, I guess their position here is just, are these good rails, right? Is this good tech? Should I use this? Is there a future a couple of years from now when someone's buying tokenized stocks on Robinhood, they've got no idea what they're buying, right? If they're buying it on crypto rails, I mean, these are intrinsically different users in both retail, and I think that's kind of where they both stand and why they're both interesting here.
You mentioned Robinhood there. I think Robinhood now is going on chain as well. I still want to boil it down a little bit to the layman. Like if you maybe one for Abby or Usman, if you had to explain to an elderly member of your family why it matters buying into these assets on chain rather than off chain, how would you describe that to them?
I think, honestly, just alluding to what I sort of said earlier, right, which was there's three things. There's access, yield, or credit. So tokenization has to, at least in terms of gold, but tokenization has to solve something, a pain point for it to be really useful. Otherwise, it's just really, let's say gold, example of gold, which is an asset, obviously I probably know better than the other assets. But if I'm just getting a gold token on chain, what's different that to GLD? Or I live in the UAE, I can order gold on Kareem, right? I can probably go buy gold via VO, not much. I think the end user, this wider layman, I don't think, frankly, they care whether it's tokenized or not. They just want exposure to an asset and how they get it. Like when you buy a stocks and shares through your VO app or any other, maybe Revolut, you don't really care like what construct is that, right? It's just, okay, I'm getting exposure to that share, that equity. So I think that's super important. I do think that maybe at an institutional level, the aspect of tokenization matters a bit more because of the things it could potentially unlock, i.e. lending and credit and yield. But at the retail level, I don't think, and I think this is the whole thing with Robinhood, right? Which is that the cryptoness of assets will be abstracted away. And it's interesting because I spent quite a bit of time in Argentina last summer, and when you speak to people who are really saving in stable coins, they don't really think of stable coins as crypto. This is, hey, I'm saving my money in dollars, right? And so that's already happened with stable coins. Nobody's like, oh, I'm saving money, and it's like, oh, this is a crypto asset. So, okay, this is digital dollars for me. And so I think it's going to be digital gold. There'll be digital equities. But yeah, I think that whole bit will be abstracted away for the user.
Yeah, I mean, I would like to add. I was in, just a few days back in India, and what I did was I was trying to onboard my parents, my aunts and uncles, and everyone, right? And one of the things that we were just talking about is how easy it is to have, hold gold by not physically having it anymore, and at the same time m- generate yields out of it, right? For retail, I think one of the biggest things that I have realized is the ease of access. They've been using banking channels for so long that they're so used to it that when you tell them to go to a better UI UX, they realize that, hey, I mean, this is great, but I'm so used to the other channels that they don't want. They first of all, they don't want to move out of a desktop for some reason. I don't know why. Especially because the age that you gave me, Gareth, which is my grandfather or my let's say my dad, right? They just love the desktop. So for them to move to a mobile and doing these things is something that I found the most hardest. But at the same time, like Usman mentioned, retail is going to be it's a different ball game to an purely institutional focused investor. Institutional focus, they understand this. Retail, for them it's like, okay, they don't care what the token is as long as my principal is there and I'm getting my interest being generated on a monthly, daily, 6 months basis, right? And another great thing that everyone loves about this whole RWS stuff is you are not getting your yields in 1 month, 3 months, 6 months. It's there are some generating daily, some are generating weekly, and some are generating monthly. And the best part of it is you can withdraw it anytime you want. You don't have to go wait for ages, years, or like to for it to like mature. All of these crap bullshit stuff that happens in the traditional space. Just saying. But yeah, I've seen the shift happening, and I'm myself I'm trying to do it. But yeah, that's an opinion that I've seen and what I've noticed as well a lot.
I, I think that one dissonance that you could see in crypto retail behavior is that they would speculate on the infrastructure, but they would never buy the products. So you would see crypto Twitter buying pump token, trading meme coins. They would never buy an on-chain treasury because it just doesn't fit the risk appetite. But what they would do is that they would buy Ondo to get exposure to all of the tokenization, Ondo as a proxy of all of the institutional adoption. So I think that that's how you approach crypto native retail, not necessarily with the products directly, because of that mismatch between the risk appetite. And what we're doing differently at Fasset is that we're targeting normal traditional retail for those who access to Apple stock has been impossible until Fasset access. Oof, I see Gareth dropped. But yeah, I was saying that that's the users. Those are the users that we're targeting. For those that it's a first time access to stocks, global USD accounts, and global debit cards. And that's how we are approaching the user acquisition strategy and what has worked for us over the last year.
Yeah, I definitely think like what you said there is crucial, right? Which is you have the Web3 retail user just wants RW exposure via token upside, right? Not they don't necessarily want on the treasury. I mean that is more an institutional facing product again, right? That dichotomy is really interesting because I think from ever since I've been involved in crypto, we're always talking about this moment where this happens, right? And the institutions come and
Yeah.
RWA needs come on chain, and now that that's happening, you're understanding we kind of just want that for the narrative, right? Ultimately.
Yeah, and it's going to be a massive shift when the metrics that we evaluate for real world assets change, right? When it's TVL and you don't look at general TVL, but you look at actually how many normal real assets you have brought on chain, how much of that is real property, for example. So the whole evaluation would change. Um, Look at what Mantra had in terms of the real estate that they actually tokenized, but then there was zero activity to add. But they had some real tokenization, not to justify the valuation at all. But slowly that metric is going to change from like total TVL to what's actually tokenized real assets. And I think that the value of the blockchain is going to be depending on those assets that sit there.
Forgive me, gents. I dropped off the Wi-Fi just then momentarily. I think my wife is using the Wi-Fi to download Legally Blonde again, so forgive me for that. I can only presume that you were talking about mining gold on the moon. So I'm going to have to ask you to repeat that to me a bit later on. So let me just gear change it a little bit, right, and spice it up a little bit. So with the preface that this is not financial advice. If I had $100,000 to deploy, what should I do with it? Joao, one for you to start.
Sorry, I was muted. Who's taking this one? I think we're all going to say our own protocol's name, so we should come up with a rule that we can't say that or no.
If depends on how much money you have to begin with, right? Because the smaller the capital you have, the more risk you're incentivized to take. If you have $100,000, then a 2x on Bitcoin is okay. If you're trying to make it with $5,000, then you need to go all out with risk, and it changes completely your portfolio construction or the market.
Yeah, that's true. But I mean, my best playbook is if you have $100,000 and you want to have $20,000, put it all on meme coins, and then you'll have $20,000 very quickly. So that's my views.
I think there's actually like a lot of people say we're early, and I do think we're early, and I think there's a lot of amazing protocols which are generating cash and revenue. And I think for me, I would just buy a bit of Bitcoin, buy a bit of gold, and then for me that's like majority of my portfolio. That would be and then you would probably, if you believe in Ethereum, you'd buy a bit of Ethereum, a bit of Solana, and then some like really strong projects which are generating yield, and I feel like actually are underpriced. I also think actually Robinhood is a great stock. I think there's so much more upside. Where even though I think it's 4x or something over the past year, but it's just there's so much upside in some of these Coinbase, even Circle, maybe not. But yeah, I think there's a lot of upside in equities as well, crypto equities, and there's going to be this big wave of crypto equities coming on in the next year. So, yeah.
How did Robinhood and their announcement, Circle trading at $80 billion valuation, how did that affect you in any way?
I mean,
what did that mean for Oro or just in general? What do you think?
I mean, I think it's honestly my read on a lot of is how crypto gets to the layman is via Web 2, embracing Web 2.5, right? I think the reality is that the new banks and the Revoluts and the Revenants of the world have already built out the distribution. And a crypto company might, or a crypto, let's say crypto super app might be able to build out distribution from for the crypto natives, but I think the guys who already have the distribution are going to win the game, and the Robinhood, and then they're going to own parts of the stack, right? They have the distribution, then they'll start owning the infra behind it, and that was my biggest takeaway from the Robinhood announcement, and that really should aspire to be working with them at some point.
That's very good point, because that's how we're approaching our strategy at Fasset, because you either own the distribution, you own the user base, or you own the stack, the compliance, the banking rails, all of that. And normally what you see in the market is that it's one or the other. And when we realized that at Fasset over the last 5 years, the two sides were built, it meant that everything in the middle could be collapsed by bringing Own in the middle. And then when you have that vertical integration, it means that you could, in one solution, have the issuance, the settlement, the distribution. So that understanding is what shaped our strategy, which is, it's interesting.
I also think it's pretty interesting because I think for a lot of countries, like Pakistan's a great example, because obviously I know you guys have a strong strategy around there, but it's very hard to build a digital bank in some countries in the right manner, because you frankly cannot offer tokenized equities, or sorry, you can't offer equities in a general manner to the Pakistani population because just the infra doesn't allow it. But now, via tokenization, you can actually offer a lot of digital banking products, which even a digital bank could, like, actually, we spoke about this, right? If you're a digital bank in Pakistan, you cannot offer a digital gold product. Forget Web 2, Web 3, you just cannot, because the supply doesn't exist in the country. So I think in places like Pakistan, etc., crypto banks will actually be the de facto digital banks, and which is, you know, what you obviously Fast is trying to do as well.
Yeah.
I just want to come back to this, the point you made about distribution, Usman and Jose. It's like that old real estate adage, location, location, location. It sounds to me like the success of real world assets is all about distribution, distribution, distribution. But it's not an easy gig, this. So, Jose, can you just help us understand what's difficult about that and some of the challenges that you might have faced?
So the thing is, distribution, it's not just the user base, but it's the licenses. And each country has their own specific licenses, and they work with the regulators and the banking rails and the full user flow to keep that user base captive. But once you have that user base, it becomes a type of monopoly of licenses in terms of who can reach certain markets. And the most interesting part of this is which are the markets that need tokenized assets the most. United States, they don't need tokenized equities. Europe doesn't need tokenized equities. Dubai, you don't need tokenized equities. The assets where the markets where you need it, it's mostly in Asia, Africa, and South America. And that's where tokenization is gonna, and the rails is gonna make the biggest difference.
And how are you seeing things through an institutional lens, Joao, in terms of the demand from a market perspective?
Yeah, I think that's the most important point, even I would say. I think you'll find that it's an interesting crux to be in, because most institutions active in our markets have a mandate for crypto yield exposure or crypto exposure. And so they're not necessarily looking to have RWA exposure, nor are they necessarily savvy in RWA risk assessment, right? And so you're kind of in this awkward in the middle, I find. What's interesting is you're definitely seeing more and more the world merge, I guess, and people are increasingly comfortable with onboarding Web2 native yield opportunities. I think we're definitely getting to a point where these are just going to be compared side by side, intrinsically, right? The liquidity is always a big problem, and you still need to. You're still competing with crypto native opportunities, so you need crypto native risk reward, right? And the fact is, crypto is very liquid, DeFi yields are very high, and infrastructure for RWAs in this case needs to be at the level of infrastructure for crypto. So crypto oracles have gotten to a pretty high level of maturity, right? Are RWA oracles as good? Same thing can be said for secondary markets or even market dynamics, right? So I think that's kind of it. Like the risk assessment, no one's really questioning the reward bit, right? That's just the gate bit. The risk assessment part is really where the problem is, and the mandate part really, I think, is often overlooked, but is important, right? Like oftentimes you're talking to a fund that is the crypto arm of a larger firm, right? They already have RWA exposure elsewhere. Like they're not looking to talk to you for RWA exposure. They got that, but they want crypto exposure now. So I think it's threading that line, navigating that frontier, that this gets murky. But if you can do it, it's a really good position to be in.
But I think that maybe it's a timeline thing, right? Because in 5 to 10 years, then the portfolio management would be fully on chain, because what you would want is that you would have the full risk spectrum. You can go from the dirtiest meme coin to altcoins to Bitcoin, to tokenized equities, to treasuries, to stablecoin, and you can move like this, staying everything in one solution. The thing is, for institutionals to have that full setup, that infrastructure to operate like that, it's going to take another 5 years. And for them, for the setup to justify the migration from traditional systems to fully on chain, the AUM needs to make sense as well.
I also think at least longer.
Building a business, you want to build something that works today and slowly progress to that reality 5 years from now, right? You don't want to just be there. In being, what's that saying? Being too early is the same as being wrong, right? Like if you're trying to build 5 years from now today, you're just wrong. So you just gotta build something that is market fit now and get there. Yeah.
A lot of tech adoption is required as well, Jose, to add to your point, because right now, all the traditional portfolio managers, even banks, are still working out of old tech, or like, which is not, or it's the most hardest part of the whole thing is to navigate through these things. So a lot of tech adoption required, and that's going to take easily another 5 to 10 years as well. So yeah.
So I've got to pick up on one thing that Joao said, which I believe is going to be a strong component in this next 5-year development of the infrastructure. And it's always the one thing which comes up, where it's the one thing that comes up most frequently whenever we're discussing RWAs, which is, sure, we understand the token, we understand the asset behind it, we understand the yield-bearing component, we understand why that's attractive. How does the off-chain data get on-chain? Who is managing those oracles? Where is that dark art between the off-chain data and the on-chain data? Can for the layman that might be watching, can someone help us understand that bridge, what that landscape looks like, and who are those players that are in there really facilitating a lot of these products to get on-chain?
Yeah, I mean, I'm happy to take this one. I think that's really where like a big part of the problem lies. Like in crypto, the price is natively on chain, right? That's the truth. Like, so you can just get it there, so to speak. You can't do that in RWA, just intrinsically. So you always have to go off chain to get it. Immediately, that brings about a million problems, because now where you're getting it, how is the information passing on chain? Is it happening in real time? Can you give the investors transparency to that process? Oftentimes you cannot, right? What's happening in the off-chain world is not, I mean, that's literally the definition, right? It's off-chain, so you can't give them full real-time on-chain-like transparency. And then you get to the more almost fundamental questions. What's the origin of the price, right? Whereas again, in crypto, it's right there. Again, I'm trying to use very generic terms. It's right there, so you can calculate it, or you know it. It's not right there, and if it's a private credit product that's originating in God knows where, right? So, yeah, when is that information trading on chain in real time, or as close to? So, I guess I would point out as issues how close the price on chain is tracking the underlying is a problem, and if the information is trustworthy, really high quality is another problem. And people tackling this, I think pretty much all of the Oracle scene realizes this is the next wave. And so everybody's trying to position themselves accordingly, one way or the other, with different solutions. You have new parties coming to the scene with new things meant to fight this problem. RWA issuers and projects like us, for example, have an intrinsic need for infra built around this to make sure that they don't have any problems, right? If we're using a faulty price oracle for an RWA asset, we have a problem because we've used it, even though it's not our oracle or our asset. So I think every stakeholder involved wants to solve it, but ultimately it's oracle builders that need new tech, right?
Yeah, honestly, I think there's the X Talks launch in the last couple of weeks has been quite an interesting, especially I think got listed on Camino yesterday, right? And they had a very interesting mechanism specifically because you obviously have a few things with, let's say, tokenized equities. Not only do you obviously need the right appropriate oracle, i.e., which equity, which exchange it's from, but then you also need to figure out what would happen in outside of hours trading. What should be, because if there's no price outside of the hours, i.e., it's not trading, how do you figure out, i.e., it's important for lending markets and other protocols, and then also making sure that your price has some element of corporate action barometer, right? Because what if there's annual results tomorrow? What if there is a resignation or some corporate event which might impact the share price and rapidly? So I think there's a lot of interesting development happening around it because it's so critical to any sort of operations and any sort of utility built around any of these products.
I think for any young budding entrepreneurs watching who are looking to go into a frontier tech discipline, Oracles is not a bad bet. But Jose, if I get approached from anyone again asking to buy a part of the moon, and there's no surveyor that can even create the off-chain data as to its value, should I consider that a scam or should I speak to them?
I should speak to them, definitely. Should connect them to me.
Okay, what I want to do is I've got one question for everyone, one burning question for everyone before we finish with the last meme competition. But I just want to underscore the discussion with for each of you. If you could share with us in 1 year's time, 365 days from now, what would be the ideal situation?
He's cracking, right?
I think we lost Gareth.
We missed the most important part of the question.
Yeah, no.
Sorry, but beg your pardon. I've told my wife to stop down there. My question was, fast forward 365 days. What does good look like for your protocol? What do you hope for in an ideal situation 1 year from now? Abhinav, we'll start with you and Mansa.
Yeah, I mean, so right now we're at $230 million in on-chain volume. We're hoping to be hitting $5 billion in on-chain volume in the next 365 days. Because I think one of the biggest pain points in payments, and when I say payments, that's a big word, OTC desk, on-ramps, off-ramps, cross-border, your traditional remittances, etc. Everyone has this one big problem, liquidity. So I think with stable coins, USDT, and other stable coins around the world, I think we should be able to help solve that liquidity problem and have that $5 billion in on-chain volume in the next 365 days.
Awesome. Best of luck with that. We will be watching you with great interest. Joao.
Yeah, I think for us would be to cross $1 billion TVL. Obviously, I think that's the dream or the iconic point, right? So our protocol is really clear moments. Like the first moment is to really focus on the final plume, which is this channel we're working on at the moment. And then we're progressing to build a junior senior tranche like lending primitive, and that we think can scale really well and is really innovative. And if we can make that hit its stride, I don't think $1 billion from now, a year from now, is far-fetched. So that's the objective.
Awesome, and again, best of luck with it, Joao. Asman, and you're not going to tell me mining gold on the moon. We're going to be calling Elon. You're on mute, Asman.
I think for me, I'm like two things. One is obviously markets-wise, I hope gold markets keep doing well, which is unfortunately does not bode well for the rest of the world. But I hope selfishly, the markets, the price keeps on going up. But generally, the heuristic is, we want to enable as many apps and fintechs to offer gold-backed products to the users. One of the larger Web2 players has almost 100 integrations. We would love to sort of get to that number. And hopefully that just means, and then the second piece is have solid capital markets and liquidity around the product. And hope, ideally this leads to, placing in top 2 tokenized gold products out there in terms of TVL, and that's closer to $1 billion, I think. So hopefully, yeah.
Sounds good to me. Let's go. Let's do it. And Jose, last but not least.
For us, the North Star is always going to be number of users, but in order to attract those users, I think strategically, it is being the go-to place for real-world assets and bringing assets that you cannot find anywhere else. I think that there's going to be a massive shift on what gets tokenized. I don't know if you've seen that picture of Chainlink that has an iceberg and has stablecoin at the top, and then tokenized treasuries, other funds, and then you go all the way down to alternative assets. I think that when those assets come on chain, that's going to make a big consumer shift, right? If you think about the ability to invest into sports teams, leagues, and own assets, that you would have a connection beyond just what's the yield. And then on the other side of the yield, you have a potential debasement of currency with all the liquidity injections that you have. So people are going to look for what are the yields that are above 10%, 20%. And there's some assets that have been exclusive. For example, if you look at the shipping industry, you have ship operational revenue that does 20 to 40% yields a year. If you look at insurance and reinsurance products, they also do between 20 and 40. So those products coming on chain is going to change a lot of the market dynamics. And yeah, for us, it's bringing those two to own.
Awesome. Thank you, Jose, and best of luck with that, of course. So before we go on to this next part, Jose,
let me share my screen.
You got to help me out here, man. You give me some guidance here for the structure today. You said at the very end, don't forget the last meme competition, but you've given me zero instructions to what that actually means. I can only assume that this is why I handed over to you to lead this part of the discussion.
Good. Let me know if you can see my screen. Can you see my screen?
We can now, yeah.
So we started a competition on our Discord, Telegram, and Twitter, and we call it Dead Asset Meme Competition. We're giving away $100. So I'm going to show you, I think it's 10 memes. We're going to vote, and whomever created that meme is going to get $100.
Very cool.
Okay. Number one. That's Fasset flips switch.
Okay, Fasset flips switch. Okay.
The instruction was quite general. It could be funny, it could be painful. It's moving, it's dying.
Okay.
Showing assets earning nothing. It's crazy what image generation can do to content creation.
I know, right? We used the same images over and over. Now they're like this one actually. Now there is original.
Yield.
This is good. This is my favorite so far, honestly.
This is number 4. Gareth, feel free to jump in anytime.
Okay. Usman, this is for you. This is good as well. Okay, I got a top 2 so far. Holy shit. Okay. Creative. I'm not sure this was the metaphor that the situation demanded.
Yeah.
Gareth made this one.
Let's move past this, please.
Sorry, but I just didn't read it anymore. I just stopped reading.
So they are.
Okay, this is cool.
This is a good one.
This is literal.
Okay, the Patrick one was the one that made me like smile the most. So I think I vote for that one personally.
Which one? Which one you said?
Goes to number 4. My personal vote goes to number 4.
4.
I'll go with
Who's
4
mine?
as well.
4. Okay.
Yeah, this is good.
My vote was the Jason one, the last one.
Me too.
Yeah, I think this one is really funny.
Right?
Who's missing?
It's very funny. Who's one? You're on time.
I like number 4, to be honest. Sorry, guys.
Nice. We'll find Billy Traits. We'll send him 100 USDT.
Yeah.
Congratulations, Billy Traits.
It's Billy Traits.
Awesome, guys.
So we went with the PG one with the cartoon, child friendly, rather than the one with trivializing the murderous horror film stuff. I think that was wise.
Ultimately, we just needed a familiar meme format, I think is what it is. We just needed something us oldies could recognize.
But very, very, very good. And thanks for everyone for submitting your memes to the competition. It's much appreciated. And congratulations there to the winner. Did you say Billy? Was it Billy? Get the name right?
Billy
there?
Traits.
Billy Trades. Congratulations there for the meme. Fantastic. Well, that wraps things up this evening. I want to thank, first of all, our guests tonight, Usman, Abby, Joao, Jose. Thanks very much for joining us and for your contributions this evening. Most of all, thank you for tuning in at home, wherever you are in the world. And we hope you tune in for us next time as well. But for now, good evening, good morning, good afternoon, wherever you are. Have a great day, and thanks for tuning in. Goodbye.
Thanks,
Thank
guys.
you.
Thank you.
Bye.
Thanks, guys. See you.
Perfect.